Joining me now to talk about how foreign car makers are doing in China is Nik Miles. He's an automotive expert and contributor to OurAutoExpert.com. Thank you for joining us.
Thank you for having me.
So let's start with a look at how foreign car makers are tailoring their products and designs to better meet the needs of Chinese consumers.
Well, one of the things is they're looking at the trends that are happening right now in China, but if you have to think about cycles of car production, it's approximately 3 to 5 years from inception to actually having a car on a showroom floor in China. And so the idea behind that is they're looking at trends not this year or next year, but in 3 to 5 years' time. And so a lot of the trends that we're seeing now at the big auto shows in China are things that were predicted 3 or 4 years ago. The difference is that car companies have a little bit of lee room because if smaller electric and autonomous style vehicles are more popular, they will shift their production in 5, 10, 20% towards those vehicles. So what they're doing now, today, is something you'll see in showrooms in 3 to 5 years.
Now, something that is happening today is Chinese consumption slowing down in this sector. How are foreign car companies adjusting their strategies?
Well, ostensibly, what's happening in China is flat sales. They haven't increased or really decreased. They have for certain brands, but not really overall. And so foreign companies are a little bit panicked about that. If you look at a company like Buick, Buick sells 80% of its vehicles in China. So out of the 1 million vehicles that Buick sells every year, 800,000 of those approximately are in China. Them not selling many cars, especially American companies like Buick or German companies like Volkswagen or Korean companies, their sales are down somewhat and they're struggling a little bit, especially because of the spat between China and the United States. So the future is a little bit gray. Nobody quite knows where it's going. It could be good, it could be bad. At this point, they're just trying to weather the current storm.
So how are these issues, not just the slower consumption, but also the US-China trade war, how is that affecting foreign retailers in China?
It's tough, and it's really tough for those people that have invested in American brands. Remember, companies like Cadillac and Lincoln have put a lot of their stead into what's going on in China. Lincoln could not probably exist as a car company without China as a component. So it's troubling to them, and it's hurting American companies. It's hurting sales in China, and everybody's looking forward to the leaders of both America and China getting together and trying to resolve these questions. And while there is let's say, a veil of uncertainty over the market, people aren't making decisions. Auto companies have an A, a B, a C, and a D plan, depending on how this trade war works itself out.
And how are these issues impacting investment when it comes to joint ventures in China?
Well, there's some difficulty in understanding where that's going. First of all, it's very complicated for an American company to become a seller in China. The laws that they have to follow are quite stringent. The profit margin compared to the United States is approximately 50% on every vehicle they sell. One of the most concerning things is projects aren't moving forward with these partnerships. A perfect instance is that we sent somebody to the site, which is supposed to be the new Chinese factory for Tesla, and not a single shovel has been planted in the ground. It's still a big piece of wasteland. Nobody started building this factory, and that probably is because we're waiting to see as two countries what happens between China and the United States, whether or not this trade problem can be sorted out and whether we can move forward as a team rather than as individuals.
Now, we already saw Tesla adjust its prices in China to try and stay competitive. And we also know that BMW become the first foreign company to offer ride-hailing in China when it launches in December in Chengdu. How might some of this exposure or some of these innovations and tactics, will that help with market share and perhaps reverse some of the consumption slowdown?
Yes, everyone's looking at how they can provide for the Chinese people, how they can do a better job in providing Chinese people in what they need as far as transportation, whether that's ride-sharing, autonomous, or some of the new forms of car transportation that are coming out. Look, the biggest problem here is Tesla is not a good example of what's going on in China, and the reason for that is they were the first, they were the original electric car company, but there are huge numbers. I'm telling you, there are going to be 100 new electric cars on sale in the world in the next 5 years. And that means that Tesla, instead of being the only electric car company, is going to be just one of 100. Companies like Jaguar, like Audi, like BMW are bringing new electric cars to market, and Tesla is struggling to keep their share of the market where it is. It's great to be first, but you've got to keep your market share, and I think we're going to see massive amounts of new electric cars hitting Chinese showrooms in the next 5 years.
All right, thank you so much. Nik Miles there of OurAutoExpert.com.